Investing is a journey filled with learning, challenges, and rewards. For many, the idea of putting money into the financial market may seem daunting, especially during times of uncertainty and pessimism. However, the greatest investors in history show us that the true secret to success lies not in predicting every market movement, but in adopting a long-term mindset and maintaining discipline in the face of adversity. In this text, I share a personal experience from the early days of my investment journey. It's a simple yet profound lesson that highlights the importance of looking beyond alarming headlines and trusting in the potential of progress and resilience. By revisiting this significant moment, I hope to demonstrate how fundamental principles can guide anyone to achieve extraordinary results, even when starting small. Let's take this trip back in time and discover together what truly makes a difference on the path to financial prosperity. Investing is a journey where you don't need to be perfect to achieve extraordinary results. Unlike many paths in life, occasional mistakes here don't define your success, as long as you adopt a disciplined and grounded approach. The key to thriving isn't in predicting market movements or making flawless choices, but in avoiding rash decisions, resisting panic, and embracing a long-term vision. I want to share with you a valuable lesson I learned through experience, revisiting a pivotal moment from my own history. Let's go back to March 12, 1942. I have a copy of the New York Times from that date. Although late in reading it, this newspaper offers a glimpse into the challenging circumstances of that period. The United States had been 3 months into World War II, facing a series of defeats in the Pacific. The outlook was bleak, with headlines announcing devastating military losses and an uncertain future. To provide context, I've selected some of those headlines from the days leading up to March 11th, a date that marked my first foray into the world of investing. The Philippines were about to fall, the enemy advanced with little resistance, and the news from March 9th highlighted the dire state of the situation. At that time, a newspaper cost just 3 cents, a detail that seems trivial today but reflects the economic impact of that era. The global pessimism was directly mirrored in the stock market. Investors were fleeing, and prices were plummeting. At just 11 years old, I was following a specific stock, City Service Preferred Stock. It had traded at $84 in 1940, dropped to $55 in 1941, and by early 1942 was around $40. Despite the bleak outlook, a decision began to form in my mind. On the night of March 11th, I sat down with my father and said, "I want to act. I'd like you to buy 3 shares of City Service for me tomorrow." This represented all the capital I had accumulated over 5 years, saving every penny I could. Despite the uncertainty, my father trusted my determination and agreed. The following morning, he executed the purchase. But the market didn't make it easy. The Dow Jones Index fell below 100 points, a historically low mark. To give perspective, the 2.28-point drop that day would equate to a loss of roughly 500 points in today's terms. Meanwhile, I was at school, anxious and full of doubts, wondering if I had made the right choice or a big mistake. This simple yet early experience became a lasting lesson. Success in investing doesn't come from perfect timing, but from believing in long-term progress and resisting fear and doubt. An interesting detail worth mentioning is that the New York Times calculated its own market averages at the time, which are now forgotten, while the Dow Jones Index remained a reference. My father, faithful to my decision, purchased the shares first thing in the morning, as I had asked. That was how my journey into the world of investing began. This story, which may seem simple, carries profound lessons. It illustrates that success in investing isn't about predicting the future or reacting to headlines, but about staying patient, thinking long-term, and believing in your convictions. Despite the difficulties of the moment, those shares became the starting point for a trajectory of learning and success. Investing is, above all, a journey of discipline, patience, and vision. If you understand this, you can transform even a small amount, like the $10,000 I used in the title, into millions over time. The key is never underestimating the power of time and compound interest. After all, the best investments are those that grow quietly while you stay focused and avoid impulsive decisions. That day, I bought shares at the highest recorded price, $38.25 per share. It was the peak of the day. By the end of the session, the price had already dropped to $37. That small drop felt like a sign of my future relationship with stocks, a reflection of the lessons I still needed to learn about time and patience in the market. At the time, City Service preferred shares were traded on what was then called the New York Curb Exchange, later renamed the American Stock Exchange. Despite the war appearing disastrous until the Battle of Midway, the shares performed impressively. Records show that I bought the shares at $38.25, and they were later redeemed by City Service itself for over $200 each. But here's the irony. This isn't a success story. Like many beginners, I made the classic mistake of selling too early. I earned a mere $5 per share, which seemed like a victory at the time, especially after seeing the price drop to $27. It was hard to resist the temptation to cash in, but looking back, it was a decision driven by impulsiveness and a lack of long-term vision. The main point of this story isn't about City Service, but the mindset of investing with a future-oriented vision. Let's return to March 11th, 1942. At that moment, the situation seemed grim in both the European and Pacific theaters. The headlines were disheartening, but despite everything, one certainty prevailed in the United States. We knew we would win the war. The American system, which had been thriving since 1776, would endure. Now imagine that instead of worrying about daily fluctuations, someone had invested $10,000 in a fund representing the overall market, the equivalent of today's S&P 500. While index funds didn't exist then, let's assume this investment represented a broad slice of the American market. Think about it. No meddling with the money, no seeking outside advice, no checking daily quotes or trying to predict the market. Simply investing and holding. One decision: believing in the potential of America and American companies. Now, imagine the value of that investment today. Do you have a number in mind? Ready? The answer is astonishing. That $10,000 would have grown into an incredible $51 million. And the best part? No need to understand accounting, pick the right stock, or time the market perfectly. All you needed to do was trust that challenges would be overcome, that America would thrive over time, and consequently, American businesses would prosper. There was no need to choose winning stocks or predict when the market would rise. Just one investment decision for a lifetime. This wasn't the only time in history this could have happened. There are several other moments when similar investments would have yielded even greater returns. The important thing is to understand that market success is less about accurate predictions and more about trusting in progress over time. As you reflect on this, remember that the big question for any investor is, how will the companies you invest in perform during your lifetime? Investing is less about timing and more about patience. The market rewards those who trust in resilience and innovation. That's the true essence of long-term investing. At the time, the City Service preferred shares were traded on what was then called the New York Curb Exchange, later renamed the American Stock Exchange. Despite the war, which seemed like an imminent disaster until the Battle of Midway, the shares performed impressively. As the records show, I bought the shares at $38.25, and they were later redeemed by City Service for over $200 each. But here's the irony. This isn't a success story. Like many beginners, I made the classic mistake of selling too early. I earned a mere $5 per share, something that seemed like a victory at the time, especially after seeing the price drop to $27. It was hard to resist the temptation to cash in. But looking back, it was a decision driven by impulsiveness and a lack of long-term vision. The main point of this story isn't about City Service, but about the mindset of investing with a forward-looking vision. Let's go back to March 11th, 1942. At that time, the situation seemed bleak in both the European and Pacific theaters. The headlines were discouraging, but despite everything, there was one prevailing certainty in the United States. We knew we would win the war. The American system, which had been thriving since 1776, would endure. Now imagine that at that moment, instead of worrying about daily fluctuations, someone had invested $10,000 in a fund that reflected the overall market, the equivalent of today's S&P 500. Although index funds didn't exist back then, we can assume that this investment represented a broad slice of the American market, Think about it. Not meddling with the money, not seeking third-party advice, not checking daily quotes or trying to predict the market. Simply invest and hold. Just one decision: to believe in the potential of America and American companies. Now, imagine the value of that investment today. Have a number in mind. Ready? The answer is astonishing. That $10,000 would have turned into an incredible $51 million. And the best part? No need to understand accounting, pick the right stock, or time the market perfectly. All you would need to do is trust that the challenges would be overcome, that America would thrive over time, and consequently, American companies would prosper. There was no need to pick winning stocks or predict when the market would rise. Just one investment decision for a lifetime. This wasn't the only time in history this could have happened. There are several other moments when similar investments would have generated even greater returns. The key is understanding that success in the market is less about making predictions and more about trusting in progress over time. As you reflect on this, remember that the big question for any investor is how the companies you invest in will perform during your lifetime. Investing is less about timing and more about patience. The market rewards those who trust in the ability to recover and innovate. That's the true essence of long-term investing. Imagine you had $10,000 in 1942. Now, instead of investing in productive businesses, you decide to listen to the prophets of doom, those who preach fear and uncertainty, and use that money to buy gold. With that amount, you would have about 300 ounces of gold. Year after year, while businesses were reinvesting their profits in new factories, innovation, and expansion, you would return to your safe to look at your 300 ounces of gold. You could touch them, admire them, maybe even caress them. But in the end, they produced nothing. They paid no dividends. They didn't create additional value. Today, those same 300 ounces of gold would be worth approximately $400,000. Does that sound like a lot? Maybe. But now consider the other side. If you had invested that same $10,000 in productive businesses in the American market in a diversified index like the S&P 500, today that value would be more than $51 million. The difference is staggering. While gold remained static, incapable of generating value, businesses were creating wealth. They were innovating, growing, and reinvesting. Every dollar invested in productive businesses yielded more than 100 times what gold generated. For every penny you earned from gold, you would have gained more than $1 from American businesses. Why do so many people seek unproductive assets like gold in times of fear? Because fear is a powerful motivator, and sensationalist headlines know how to exploit it like no one else. Alarmist advice is sold as absolute truth, propagated by prophets of doom who insist that the end is near, that the market will crash, and that the only way out is to seek refuge. The headlines scream of economic collapse, political unrest, and the impending disaster that will sweep us all away. But what many fail to realize is that by acting this way, they are making a crucial mistake, trading real and meaningful growth potential for a false sense of security. This fear-driven behavior often leads to decisions that provide short-term comfort but miss out on long-term prosperity. Gold, while attractive in times of uncertainty, is a static asset. It doesn't work for you. It doesn't grow. It doesn't innovate. It simply sits there, taking up space without generating any return. You can look at it, admire it, and maybe feel a sense of safety, but in reality, it is doing nothing for you. And by choosing gold or other unproductive assets, you are essentially freezing your growth opportunities while the market continues to move forward. Over the long term, this lack of growth from unproductive assets like gold becomes glaringly apparent. The market, on the other hand, offers opportunities for continuous development and expansion. The truth is that the American market has been one of the greatest wealth generators in history. Since 1776, the progress and resilience of the American system have been a constant engine of innovation and prosperity. It's a system built on entrepreneurship, innovation, and the constant reinvention of itself. Investing in the market is betting on this progress, on companies that are constantly evolving, overcoming challenges, and creating value. And the best part is that you don't need to be a financial genius to take advantage of it. You don't need an advanced degree in accounting or the ability to predict the movements of the Federal Reserve or a keen obsession with daily market fluctuations. These concerns, which seem urgent in the short term, become insignificant in the context of decades of consistent investing. The market doesn't reward those who try to time every twist and turn. It rewards those who trust in its ability to grow over time. What really matters is adopting a solid investment philosophy, one that you understand and trust, and sticking to it, even in turbulent times. True wealth is not built with impulsive reactions or panic. It is built with patience, vision, and consistency. A clear strategy, grounded in long-term goals, allows you to weather the inevitable storms and come out ahead in the end. Think about this. Over the years, a simple, disciplined approach to the market would have allowed you to outperform even the most active professional investors. Most so-called experts who try to beat the market with complex strategies often fail to achieve the returns that a passive, well-founded strategy can provide. These professionals may obsess over minor fluctuations, making constant adjustments, but history shows that they often end up with lower returns compared to those who simply invest steadily over the long term. This doesn't mean that achieving success in investing is easy. It means it's powerful. The path to financial success doesn't require constant action or panic. It requires a deep understanding of the power of patience, because simplicity, combined with patience, is one of the most effective tools in the world of investing. You don't need to follow every market movement or every economic forecast. You don't need to be gripped by the fear of missing out on short-term gains. There's no need to live in the anxiety of what if. The market rewards those who trust in long-term progress, not those who live at the mercy of the day's headlines. The secret to success in investing is not running around from side to side, but making wise decisions and allowing time to work its magic. While others waste energy and money seeking security in non-productive assets, you can take advantage of the power of the market and reap the rewards of human progress. The market offers real potential for wealth creation, but it requires a calm and rational approach, not one based on fear and impulsive decisions. That's the true power of a well-founded strategy. It not only generates financial returns, but also provides an invaluable sense of peace of mind. This sense of peace comes from knowing that your investments are aligned with a larger vision, one that doesn't focus on the ups and downs of daily market fluctuations, but instead embraces the long-term potential of growth and progress. When you've established a strategy grounded in this kind of understanding, you can face the most turbulent periods in the market with an unwavering confidence. It's the confidence that comes from knowing, deep down, that even in times of economic downturn, financial uncertainty, or market volatility, you are building something bigger, something more significant than just short-term gains. You are contributing to a process that has been proven to create wealth over time as businesses innovate, expand, and adapt to changing circumstances. When your investments are aligned with this vision of progress, it becomes easier to ignore the distractions of fear and panic that often accompany moments of uncertainty. This is the strength of choosing progress over panic, choosing to believe in the power of innovation, reinvestment, and sustainable growth rather than rushing to escape from the market at the first sign of trouble. Progress, after all, is not a straight path. It is often filled with obstacles, setbacks, and periods of discomfort. But through these challenges, we find the opportunities that fuel long-term prosperity. Understanding that it's the ability to weather these storms that ultimately makes the difference between success and failure is key to building a truly effective investment strategy. This story is much more than a simple memory from my own early days in investing. It's a powerful, transformative lesson on how to invest wisely and thoughtfully. Despite the grim outlook and alarmist headlines of 1942, when the world was engulfed in war, my first foray into the market demonstrated something fundamental. True success in investing is not about avoiding risk at all costs. Instead, it's about adopting a mindset that is rooted in the long term, embracing both the challenges and the rewards that come with it. Risk, like fear and uncertainty, is always present. It's an inescapable part of the investment landscape. However, What distinguishes the successful investor from the rest is the willingness to take calculated risks, knowing that they are a necessary part of the growth process. Those who have the ability to stay the course despite the unpredictable twists and turns of the market are the ones who will see lasting success. It's not about avoiding risk entirely, but about managing it wisely and using it as a stepping stone to greater achievements. Fear and uncertainty are universal experiences. They were as real in 1942 as they are today. Economic, political, and social conditions may change, but the emotional response to these events often remains the same. In such moments, it's easy to let fear cloud your judgment and to make rash decisions that seem like a safer option in the moment. But those who can look beyond the immediate circumstances, who can zoom out and focus on the broader, long-term picture, are the ones who ultimately succeed. Trusting in the long-term growth potential of the markets, rather than succumbing to panic, is the secret to achieving lasting wealth. The true lesson here is that investing isn't about predicting the future with absolute certainty or worrying about every little fluctuation in the market. It's about having conviction. Conviction in the power of progress, the resilience of the economic systems that drive growth, and the ability of businesses to adapt and thrive over time. This kind of conviction gives you the courage to ride out market cycles, knowing that the value of your investments will grow over the long term, even if it takes years for them to fully appreciate. Investing is, at its very core, a commitment to time. It's a commitment to the potential for a more prosperous future, to the belief that the right investments will continue to deliver value over the decades to come. This belief goes beyond mere financial returns. It is a mindset that acknowledges the importance of patience, discipline, and consistency. It's about understanding that the wealth generated from your investments isn't just about the dollars you make, but also about the long-term impact your investments can have on your life, your family, and your future. This is a lesson that transcends the numbers and stock tickers we often obsess over in the investment world. It's a reminder that true wealth comes from making decisions with calm, confidence, and vision. Decisions that reflect a belief in the future and a commitment to growth. Even small steps, taken consistently over time, can lead to extraordinary achievements. The ability to believe in your strategy, to act with purpose, and to let time do its part is the essence of long-term success. And this, above all else, is what separates successful investors from those who constantly chase short-term wins without regard for the larger picture. In the end, the true power of investing lies not in how fast you can accumulate wealth, but in how well you can build something that lasts, a foundation of growth, innovation, and patience that will provide returns for generations to come. In conclusion, the true power of a well-founded strategy lies not only in financial returns, but in the peace of mind it provides. When you invest with a long-term vision aligned with sustainable growth, you can face even the most turbulent times with confidence, knowing that you are building something lasting. Investment success is not about avoiding risks or following the daily market fluctuations, but about adopting a patient, disciplined, and resilient mindset. True wealth is created by those who choose progress, not panic. By trusting in the potential of companies and the adaptability of the market, and by making informed decisions, you build a prosperous and secure future. It is not the speed of decisions or the obsession with the short term that defines successful investors, but patience, vision, and consistency. The secret lies in believing in the future, acting with purpose, and letting time work its magic. With this approach, small steps turn into extraordinary achievements, creating a lasting legacy of prosperity.